I would say everything is pretty positive, and I would say that probably if these implementations of the fiscal easing is really coming through, then that should allow us to reduce the deflation risk when we think about the Chinese macroeconomic outlook.
Okay, so that's exactly what I wanted to ask you about. We're seeing these more specific, more targeted measures within the property and real estate sector. We know that's been an issue in China for some time now. But Michelle, is this fiscal policy support enough to end deflation and keep that 5% growth target alive?
So we will see what the government is really going to announce on the fiscal policy measures. But I think the general sense that I've got is that now the thinking is really shifting. Remember, like maybe at the beginning of the year when a lot of analysts and economists are calling for maybe to improve the consumption support, the household income support. Actually, there have not been a lot of measures being announced on that front. But then last month, we've got the State Council announcing this special CGB issuance to be used to support the trading programs for some of the consumption goods. And I think it could be increasingly likely that this shift will lead us to maybe more support measures focusing on consumption and income. And I think that is really important to shore up consumer confidence, or else we think that the deflation risk is just rising and rising. And I think with regard to the property sector, I would say that maybe so far what we've got from the PBOC and also the local governments, there are some incremental changes, but I think for us to be more assuring about the turnaround in the property market is that we'll see if the central government is willing to support the housing destocking scheme with their funding. Because remember, in May they announced the destocking scheme. Actually, the implementation has been very, very slow for various reasons, such as the rental yields. The projects are actually not that attractive for the local SOEs to engage in these projects. So if we see that the government is willing to throw some money to support the destocking scheme, then I would also think that it's pretty positive for the property market as well. But of course, we are talking about
Michelle, right.
The households. Yeah, they've been they in the past they're not used to a big collapse in the property prices, and now yes, please go ahead.
Yeah, Michelle, I just wanted to jump in with a question on politics and policy here. I think you make an excellent point, but maybe just to play devil's advocate here, so much of the focus through the course of the US election so far has been on the China tariff risk. And I want your take on that. Is there a view out there that perhaps this is China shoring up its economy ahead of a potential Trump return in the United States?
I don't think this is the reason. I think the reason is that, I think you see the economic data is actually being deteriorating pretty sharply over the summer. And for example, you look at the fiscal revenue collected from the personal income tax, it actually dropped 5% year to date, and there is some slowdown in the recent months. And also, you look at the youth unemployment rate that's just announced last week. Actually, normally the youth unemployment rate, you would expect that it would peak around July because of the seasonality and start to come down in August. But even for that measure, it starts to increase in August. And then again, you look at the employment indices in the manufacturing PMI surveys. It just shows that actually the employment situation is getting more challenging in China. So I think that is just come to a point that probably the policymakers think that it is really time for them to change their mind. And given that for the housing sector, in particular, the National Day holiday is normally a month, a period that Chinese people go to look to buy the property. So probably they would want to announce some measures to really shore up the property confidence before that.